Last I checked, gold prices are up again today, another $37 an ounce. And I've been telling you guys to get involved with this gold trade for many years now, since it was trading at about $1,600, over $1,400 an ounce less. And do you think that if you'd known that information then, that you could have made good up until this point? I think so, and I think that it's working out pretty well if you're a gold investor, and congratulations if you're a Peter Leeds subscriber. I'm coming out with a report very soon. All my favorite gold mining companies that I believe are Peter Leeds approved. I've put them through 29-point Leeds analysis. Some of my favorite stocks that are at tremendously undervalued levels. And it's not too late to get involved with this stuff. It can still be a winning trade for you, even though you might feel like you're missing out a bit. I mean, a lot of these gold mining companies that we've talked about, the ones I invest in personally that I tell you about, my personal portfolio, if you're a newsletter subscriber, you would have seen that. A lot of the ones that are Peter Leeds approved, some of them have gone up in value a lot, and I've cashed out of a few because they've been moving so quickly. And a lot of the stocks have done really well. But there's some that are still lagging, and they're about to have their profit margins explode, and their share price will react to that by following suit and climbing a lot higher. And at the time when all these gold prices are climbing higher and higher every day because of the deterioration of the US dollar and the overall uncertainty that's going on in the world, people fly to safety when there's a lot of commotion and uncertainty. And one of the ways they do that is they put a lot of money into gold. And central banks have a lot of value that they have to store. And the way to do that is by gold. They don't store value in many other ways. Gold has always been money. It will always be money. But while this is happening, silver prices seem to be languishing. And they're doing all right, but they're not representing their true value, especially if you saw my silver squeeze videos, part 1, part 2, part 3, there's over 200 million ounces of silver each year that is a shortfall in terms of what's needed based on the demand compared to the production. When there's that kind of demand for anything, could be sweaters on a hot day, and there's not enough supply, the prices increase. You're going to see that with silver and therefore silver mining companies. But as I told you before, you don't usually have a silver mining pure play. They only look for silver. That doesn't happen. When you look for anything, you crush a bunch of rock, you take all the value out of it, whether it's diamonds, copper, or silver, or gold. But there's a lot of silver mining companies that are also doing tremendously, other ones that are yet to move. And you're at the turning point. It's a great time. If you just showed up today, you haven't even had an internet connection until today, and you find this video, you are not too late. It's a great time to get involved with some of the right kinds of these mining companies as the precious metals increase in price based on the deterioration of things like currencies, such as the US dollar. But the big question that I always get is, what's going to happen? And I've even told you about this a little bit, that when there's a big stock market crash or a significant recession, you're going to see a lot of these mining companies take a hit sometimes. But I thought, you know what, let's go deep into this and I'll show you exact numbers about what's happened before. And I understand the four most dangerous words in the stock market are, this time it's different. So when you look at stuff that's happened in the past, don't use that to gauge anything and don't assume that it's going to be different. But it is a unique situation. I'll say it that way. I don't want to say this time it's different, but it is a different scenario right now. Things have changed. There's different debt levels, there's different understanding, there's different ways that information gets to people like you and I right now, where you can learn anything you want to learn, and people are realizing that there's not a lot of true value in a currency if it's just unlimited. Part of the problem I have with cryptocurrencies, if there's unlimited supply, potentially unlimited supply, you can't value that. It can't be a valuable thing because I could just make 20 million more of them. But that's one of the reasons that I like Bitcoin out of all the cryptocurrencies, but they will all trade like a flock of birds. When they do well, they'll all do well together. When they do poorly, they'll all do poorly together. And that's sort of similar to gold mining stocks, as we saw recently. A lot of them are finally waking up, and that's why all of a sudden you see all the miners go up significantly in a day. They're trading in sympathy for the right reasons. So for you here, I have a chart of recessions and what happened to gold compared to the S&P 500 in terms of percentage gains and in terms of comparative percentage gains. This chart starts in 1973. You'll see that there was a recession that lasted about a year and a half, which is a good, healthy recession. If a recession lasts 2 months like that ridiculous one we had last time that was based on the economy closing down and then opening up again, that whole recession, don't even count that. But it's been so long since we've had a contraction of the economic system. I tell you that the economy is a lung where you breathe in, you breathe out. You want to breathe in deeply, but you also want to breathe out for enough. You don't want to take a little breath. You want to breathe out and hyperventilate or whatever you want to do. You want a recession to get rid of a lot of over leverage in a system to go back towards a healthier economy, so that then therefore it'll be sustainable to continue to grow at a good, consistent, manageable, and maintainable rate. So a short recession is a sort of an annoying thing. A recession that's at least half a year long, year and a half is great. You know that when you come out of that, there's a lot of value, a lot of underpriced investments, and they'll have a lot of years of growth going forward from that point. But in 1973, the year I was born, I was actually zero. I didn't even exist. In 1973, there was a recession that lasted a year and a half, and during that time, gold prices increased by 39%. And compared to the S&P 500, the relative performance was that gold prices were 79% higher, and that's because the S&P over that time declined in value. So comparatively, it was a better idea to own gold because not only did you get the gains, you also avoided the losses. But the absolute gold price performance at that point was 85% gain, whereas gold stocks compared to the S&P, while it fell, the relative gain was 131%. In 1980, the recession was only 6 months long, and gold prices increased 184%. And over that time, compared to the S&P 500, the gain was only 125% because the S&P did not decline and increased over that time. But in general, even during recessions, gold stocks increased pretty well. There's a couple of years where there was a recession where gold prices declined, and therefore gold mining stocks also declined. Not therefore, but notably. But after the dot-com bubble burst, in 2001, gold prices increased by only 19%, but the gold stocks went up 103%. And compared to the S&P 500, which did horribly over the time, the relative gain was 174% gain. That's about increasing your wealth. Your wealth is building, even if the gold mining stocks go up 50%. If that happens at a time when the stock market overall is dropping 40%, you're actually building your wealth even more than you can see on paper. The nominal value, you might make $100,000, but you're relatively worth $200,000 more compared to everything else, so to speak. I'm oversimplifying. I hope that you understand what I'm trying to get at here. But in general, in the hard times, gold is a flight to safety and they do really well. And there might be a bit of a drawback, but it depends too, what is your time frame outlook? I am just going to hold a lot of these gold mining stocks because I believe they're going to do tremendously well, even if they have a bump in the road. You don't want to try and time this stuff. Gold and gold investing is such a slow-moving thing that you don't want to say, I got to sell today and I'll make more money, and then you're day trading. That's ridiculous. You just invest and forget about it. I always mention, and I've said it a few times in a few emails very recently, investing well is incredibly boring. It really is. Since I was born, I'm 51 years old now. Since I was born, the average length of a recession was 11 months. The gold bullion price performance was 28% higher. The gold bullion versus the S&P over those times was a 37% relative gain. The absolute performance of gold stocks was 61%. And compared to the S&P 500 over those days, the relative gain was 69%. There's only 2 years where the prices came down. Okay. That's the details, that's the stats. But think of it now this way. The one thing that's different, and I know, that's what I was saying earlier, it's different this time, but the one thing that is different is this is all happening at a time where gold prices themselves are blowing away all the numbers in this chart on the averages of what you've seen before. Gold has never moved so dramatically, so bullishly, and I'll take a victory lap. I'm so proud of the fact that I saw this coming so long ago. You guys might even remember an ill-advised time when I was just trying to learn how to do YouTube stuff, where I was on the cruise ship and I was talking about how I had moved all my investments out of a lot of stuff and put a lot of my investments, a big percentage of it, in gold specifically. And it's paying off, and it's been paying off ever since, and it's going to be paying off for quite a long time. And I believe that even after this most dramatic move in gold, this is almost like a warning or a wake-up call for investors, because it's really moving fast, because it's going into a phase of explosive gains, in my opinion. If you remember, before it was breaking through $2,000 an ounce, and people were saying, oh, maybe we'll do it. Could we do it? Could gold break through 2,000? Can you believe it? And it almost did it. It bounced back, and it did for a second, and it came back. Everyone's talking about, wow, $2,000 gold. And then you broke through, and we haven't really looked back. It's just a really rapid gain up to 3,000. The difference between going from 1,000 to 2,000 took decades. The speed to go from 2,000 to 3,000 took a handful of years. How fast do you think it's going to go from 3 to 6,000? I bet you it'll be a handful of years at most. Everything is happening right now. The entire world has the technology to learn anything they want to learn and see whatever they want to see. And we're all together looking at the fact that fiat currencies, currencies that are not backed by anything, are a fool's errand, that they are just no true value in them. It's a reflection, or their value is a reflection of how many dollars there are out there. So if they print more money, which they're about to do, quantitative easing, they're about to do again, the currencies will deteriorate in value towards significant inflation. That's why I always say your grandfather's house that he bought for $40,000, that's worth $400,000 now, wasn't necessarily a great, wise investment. It's just taking more dollars to buy the same asset. And when you understand that gold never, ever changes value, even you see it went up $37 an ounce today, it never changes value. And it's just tapping at the edge of $3,000 an ounce. But gold has never changed. It just sat there, and it just takes more currency to buy the same thing. The price of gold is a reflection of the deterioration of whatever currency you're using to buy the gold with. And it's not just picking on the US dollar. Every currency in the world right now, every currency is fiat. The only one that will not be is if the BRICS actually do release their gold-backed currency, because it's backed partially by money, so it's different than just being backed by nothing. But long story short, I really want to keep helping you guys, and I know I've helped a lot of you with this already. There's a lot of money to be made, the most of the money to be made. If you were with me for a while, you've been a subscriber to the newsletter, you are involved with a lot of these gold mining companies at much lower prices. They've increased in value a lot, but not even close to how much they should have increased, based on the tremendous explosive value of the commodity that they're digging out of the ground and selling. They're digging something out of the ground that used to be worth $1,600. That same thing, and all other things being equal, it's about the same amount of work to get an ounce of gold out now. But the difference being now they can sell it for nearly twice the price that they used to. And a lot of stocks, like one that I own personally, Newmont Mining, is actually lower in share price than when gold costs tremendously less. And they dig it out and they go, we'll sell you this, and they get twice as much as they used to. That has not yet reflected fully, not even close, into the share prices. And therefore, that is a massive and clear imbalance that is the best way to invest, is when you see an imbalance like that. The value of the thing is exploding. The company that gets the thing and sells it is languishing. I can't give you personalized investing advice, and I don't want to. You got to make your own decisions. I'm sorry, but I don't see the downside of this. And people say, well, isn't there going to be a big stock market crash? I believe so. But when that happens, will gold prices decline? No, because they're not related to stocks. They're related to demands worldwide. But the stocks that mine for gold will suffer a significant amount, maybe, probably a little bit, maybe not at all. It is a different situation now. I can't say it's different this time because that's a mistake, but things are unique now. Gold has been soaring. People think they've missed the boat at the beginning of what is a long, serious, world-changing journey and a once-in-a-generational, once-in-a-lifetime opportunity that I'm telling you right now at no cost. I'm sure you're not paying to watch this video. So at very least, take that and benefit from that on your own. Enjoy yourself. And if you want to know the stocks, because most gold mining companies go out of business, just like most biotech companies, just like most of just about any kind of company, restaurants. They all go out of business except for specific ones. And if you know how to find the specific ones, which is what I do by putting stocks through 29-point Leeds analysis, I know how to look under the hood and tell you how much money they make, how much money they're going to make, what are they paying for expenses, all this stuff. It's fun for me. It's easy for me. And I know a lot of people don't like doing that. It's a tremendous amount of work. And that's why the newsletter has been one of the most popular financial newsletters of all time for 30 years almost now. I've been doing exactly this for nearly 30 years. Nothing different. I'm using different tools that didn't exist before, like, for example, the internet. When it came out, I thought, you know what? I've got this newsletter that I would print and I would mail it to people. Why not put it online? And then I thought, why not charge people online? This is all stuff that I did early on in the day that was really hard to do back then. Now, anybody and their grandma can just get internet connectivity and merchant status, yada, yada. It's so much easier now. But my point being, you can make the decisions you need to make. You've got all the tools you need. I can help you with the newsletter. And if you want more from me and you want to pay $200 for the newsletter, this is not supposed to be a sales pitch. I just want to talk about what's going to happen with gold. If you want to know more from me, then consider becoming a Peter Leeds Insider. That's only a couple of bucks. There's details below this video, and I'm going to keep helping you guys. Don't go away and don't be scared that you think you missed the boat. This is the best time to get involved for you. You got lucky because people aren't understanding how the value of gold will affect the companies that sell gold. And I think that you know deep down that it will. And the fact that nobody sees it yet is such an opportunity for you.